This morning, I'm looking at gold and the stock markets for some analysis and trade ideas for this week. Gold, as you can see on the daily chart, has been moving sideways since April. 4.5 months there of just trading sideways, very erratic, no clear trend or pattern to follow. We had a bit of a rally into the end of last week. We could easily turn around and reverse and lose that at the beginning of this week. It's difficult to predict when there's no trend or pattern, but if you look at the hourly chart, which again clearly shows a lot of sideways movement, the moving averages are flatlining and converging, which is what happens when markets are in sideways consolidations. We've got slow stochastics trending downwards here at the bottom of the chart, and we've got the price trending upwards over the last couple of days. So you can see that there is a negative divergence, the slow stochastic indicating that perhaps we're going to get another downturn at the beginning of this week. Now, interestingly, on the stock markets, we're getting the same kind of thing. This is the hourly chart for the Emini S&P futures. I've got an upward sloping trend line on the price, but I've got a downward sloping trend line on the slow stochastic. So again, maybe the stock markets are due for another move to the downside. Good recovery on Thursday and Friday. Just as we open on Monday or Sunday night for some of you guys, you can see that we're unchanged. We're just holding above the 100-day moving average. That's a positive for the S&P. But I've got a feeling we're going to turn down. We're no longer oversold on the daily chart, and we do have that negative divergence, and we are hitting some resistance as well. On the hourly chart, we've got the 200-hour moving average, which is holding us. It did hold us over the last couple of days, so maybe we're due for a move to the downside. I could even argue that this is a rising wedge, which is a negative pattern. And if we break below the lower trend line, which is just coming up to meet the 200-hour moving average now, so it's getting to quite a crucial point. We've either got to break above 53.90 or we're going to break below the lower trend line at around 53.65, 53.60, and that should trigger further significant moves to the downside. We're seeing a very similar picture in the Nasdaq. We've got this channel here, which is a consolidation, and I think it could be a bear flag. We've had a move to the downside, which we'll have a look at in the daily chart in a sec. But I think this could be a bear flag, which means eventually we'll break the lower trend lines and have a decent sell-off. For now, we're holding this upper trend line here on the hourly chart. We're holding the red 200-hour moving average. We've got the negative divergence on the slow stochastic on the hourly chart as well. If I go to the daily chart, obviously you can see we have been in a quite significant correction. There is a trend line here, and this one goes all the way back to August of 2022. So this trend line is 2 years old. And you can see we're just coming up to hit it now. I've left that trend line on there because it's been really relevant for holding highs and lows in these trend moves. And now we're retesting it. So I think we've got a strong resistance level in the Nasdaq, both in the short term and in the long term. We're clipping some Fibonacci resistance here. My bias is to the downside, certainly for the beginning of this week for the Nasdaq and the S&P. I am short the Nasdaq and the Emini S&P with a tight stop, but I'm not trading the Dow Jones. However, I could put a trend line on here just to show you how we seem to be holding the trend lines on the bounce. We've got 38.2% fib resistance, 39,643, and we haven't managed to hold above there. So we could break to the downside, move below 39,500, could trigger that in the Dow Jones this week. I hope you found this helpful. Please like, share, and subscribe, and do send me your comments and thoughts on which way the markets are going to go this week.